Those inflation numbers just crossing the Bloomberg right now. Ouch. It's negative 0.8% for CPI. So this is worse than expected and also marking a fourth straight month of inflation in negative territory. So we're waiting for those PPI numbers, slightly better than expected. We're still talking about contraction of 2.5%. So that marks 16 months of deflation when it comes to those producer prices as well. Joining us now is Helen Chao, Chief Greater China Economist at BofA Global Research. What do we make of this? The story is not really changing in any way right now.
Not exactly in the direction, but I have to say that the minus 0.8% is a slight miss. So relative to our expectation of 0.6, it is a little bit worse, but I would say that it is against a high base because the Lunar New Year effect is coming in. Last year, the Lunar New Year starts from late Jan.
And the dates were changed, yes.
Yes, correct. So we are expecting some sequential, kind of pickup in food prices because compared to December, people are starting to prepare for their Lunar New Year right now already towards the end of Jan and early Feb, but that wouldn't be as strong as, for example, what we saw in in Jan 2023. So I think that Lunar New Year effect is probably part to blame. But that said, the overall, inflationary pressure is probably very weak.
We're also not going to get a whole lot of data maybe from now until March, right? Just given the Lunar New Year effects and all that. I mean, what sort of visibility are you seeing of when things are really going to start bottoming out for the economy?
Well, we're keeping our fingers crossed for second quarter because we think that not only the base is going to get a bit lower, but also, the policy easing measures are going to start to kick in. So we think that infrastructure investment, for example, 三大项目, the three projects, the social housing, the urban, village renovation, as well as the infrastructure build out for regular and emergency uses. So those are probably going to be deployed and better implemented as we speak in the first quarter. And therefore, by second quarter, that will start to show up better.
Yeah. So just that line crossing right now where consumer prices are falling at the fastest pace since September 2009. Helen Chao talking about the seasonal effects of all this given the Lunar New Year holiday. What do you think gets us out of this deflationary spiral?
Well, we are expecting that the demand, overall aggregate demand, has to come back. But I would say that at the moment, consumption is probably what we're hoping for in the near future to be more resilient. But on top of that, I think what really comes back is that we need to see more investment momentum. So we understand that the property-related investment is pretty weak. So the hope right now is for manufacturing-related and infrastructure-related investment. So on top of that, if we put in social housing construction, then we can probably see that the investment demand coming back a bit better. So combined with that, the domestic demand, on the consumption side and the investment side will probably look better to lift the overall inflationary pressure a bit higher.
Given just the stimulus measures we've seen so far, I'm guessing normally we would have seen a bit of more of a turn of the economy by now. We're still struggling to find that. Does this just go to show how different the cycle is from the past?
Well, so I would say it is very different from the previous times, indeed.
Yes.
But partly, I think it's because that the policy easing measures are probably harder to show up. And partly because, number one, the policy credibility is relatively low after COVID. People have less expectation about the implementation. And second, people are also, seeing that in terms of the positive incentives for government officials, SOEs to implement something being extremely low. So there's a lot of downside risks for not doing something or even doing something, but there's not too much upside risk for, any particular policy action. So as a result, we think that the policy seems to be less effective so far, and it takes longer than usual to kick in.
What would be most effective right now in terms of what what would you prescribe at the moment to be the most effective policy tool?
We would prefer to see a bit more combination of demand side as well as the supply side policy stimulus. But at the moment, I think that in terms of where the policy is going instead of should be going, we probably are still seeing more on the supply side, meaning that infrastructure related investment, etc., to create jobs, create income, that will be very helpful. But at the moment, that may not be enough. So we're we're hoping to see a bit more on the demand side, including, but not limited to, for example, giving out some cash to low-income families just to support their consumption. But at the moment, we do not see too much of a bias from the policymakers towards that direction. So we think that we need to keep saying that this is important.